Good morning, good afternoon, good evening, wherever you are in this beautiful world. Welcome back to this channel. Today I'll be showing you some bad news and some potential good news. Let's just jump straight into the content. Don't forget to leave a like for the algorithm, and I appreciate it if you did. This chart we've been over for forever, almost, I guess. And yeah, it shows that we're definitely not out of the woods yet. On the weekly chart, we've seen this channel forming, this falling wedge, and but we are still creating lower highs, lower highs, lower highs, lower highs, and still lower highs. So yeah, we're still in a downtrend, right? So the only thing that could potentially get us somewhere more bullish is we close a weekly above this candle right here. So at least close above the 19.2, which is a very significant level. And yeah, the 20.2K region is very interesting to watch. Right now, unless we break that, then we are still in a downtrend, and we should expect the 13.5 level to be reached, which is on the monthly for everyone to show. This is on the monthly chart right here with the previous bull market, 2017 bull market, and with the blow off top, and the December candle closed at the 13.5 region, and we haven't visited that level yet. If we look at it from the monthly perspective, then yeah, we still could see some downwards momentum. The only thing is that we are definitely moving up in the MACD and in the histogram right here, but yeah, the histogram needs to go something like this, and then this one needs to go like that, which is a bullish cross, which we call a bullish cross, right? So still definitely in a downtrend. There's not good news whatsoever. The Fed rate hikes settling down a little bit is was some good news, I guess, but it yeah, hardly made any difference. We can see that on the daily, because yeah, we saw a little pump. We saw a little pump on that, but yeah, it got rejected immediately, and that was here, right? So we saw a little pump, but we yeah, closed a little above the previous high, which looked good, but then we dropped immediately again. So this wasn't something yeah, that held very good, and yeah, that's not necessarily the best thing, of course. If we look at it, this channel, we still are broken out. We've retested it, and now we see some sideways momentum. I think the next year will be sideways momentum, and will probably range anywhere between this line, if we even reach that, and then yeah, most likely go a little like this until the next halving. But that is based on previous bear market and the longevity of bear markets. If we look at the from the halving or towards the halving, we are 15 months before the next halving, and then yeah, normally we see some incline in price, and the next halving is in March. Let's see, I cannot show that on this chart. It's in March, somewhere in 24. So we will probably see some sideways momentum until March 24, and then go a little up, or at least if history is any indication for what will happen in the future, right? So if we look at it from the 4-hourly, then what was interesting was that we were looking at this yeah, bear flag, right? We were looking at this bear flag, and this was holding up. It closed below. If it was fortunate for me, I guess, that I was asleep when this happened, because I would have shorted this one, I guess, because everything's looking bearish, and yeah, everything's still in a downtrend. So the likelihood of it breaking down was quite significant. It would have went to the 15.2 if I remember exactly. No, let's just not guesstimate, but measure. I like being accurate, right? So the 15.3k was the target from this bear flag, but you can see, yeah, this is a little fake out, I guess. Potentially it still could go down and reach these levels, but if we look at it from a technical standpoint, we broke down, we retested it, and we retested it again, and then it broke through. But now you can see that, let me just see, remove this and remove this all together. What you can see is that this drop was came with a little volume, but we rose above again higher than the previous candle. So that dip was definitely bought up, right? If you know how to read candles, then yeah, you can see this is a longer wick to the downside, which wasn't that good of a sign. If we look at it from the 1 hour time frame, then you can see this. Yeah, the hour. This is the hour where it went down, but it got already wicked up, and then you can see some upward momentum. So that is quite nice. Reading candles is not easy, but if you look at those wicks and the candle closing above the previous candles, then that looks quite good, right? So good for the short term, right? If we look at it from the daily, we are still, and from the weekly, we are still and are most likely to be ranging within these thick blue lines. And that's probably going to be a little time before we get there. There is some bullish news also, and I would like to share with you as well, because I want to be as open and transparent as I can be, and try to help you in navigating through this market, right? Let's just I've shown you the lower lows, but yeah, we've seen them on the weekly, but now I'll show them to you on the daily as well. We are still creating lower highs and also lower lows, right? So low, this is a low, this is a low, this is a low, this is a low, and this one is a lower low. So definitely a downtrend, so there's no doubt about that. Let me remove this as well. Okay, let's go to the bullish news then, or the more bullish news, which is the DXY or the Dixie, which was in a parabolic uptrend. It broke down. Like you can see right now, we are creating some sort of a falling wedge, which is a normally bullish, bearish, bullish biased pattern. And if a breakout would be for the Dixie, then we would retest it, and then it would go to the bottom of this wedge, right? So this is the technical target out of this, but in the immediate short term, I really do believe that this 102.9 is a level that I expect to touch, at least in the immediate short term. And we've discussed this Dixie, this region quite often. It has very high significance, and that's why it's likely for me to see the Dixie or the dollar index retesting this level. If this breaks to the downside, then I think we will see some very good news for Bitcoin. And if it breaks to the upside, we will see some downward momentum. Altcoins are really annihilated. You can see probably in your portfolio. Bitcoin as well, but it's kept its stance quite well over the last couple of weeks. But your altcoins are still going down, and I do expect a lot of altcoins to not make it through this bear market. So please, I don't know how to say this enough, but yeah, please be careful with altcoins. I know a lot of YouTubers went very rich with altcoins, but there is a reason why I'm in Bitcoin, and there is also a reason why I'm 75% down and not 99% or all the way down. And that's because that it is Bitcoin, and Bitcoin is anything different than any other crypto. So you cannot compare the two with each other. Bitcoin is unlimited. It doesn't have a centralized C-suite with the CEO and the CMO and the CTO and whatever. People, there's a fixed supply of 21 million in Bitcoin, and Satoshi Nakamoto really made something very different than the dollar, than the euro, but also than every other crypto, because every other crypto that's out there is centralized, and there is a inflationary or deflationary supply. But like the FTX scandal, you could just make 210 million new coins, and then your value drops. So please be very careful with altcoins right now. I'm going into altcoins when the Bitcoin dominance, and let me see, that's BTC1, right? Dominance. I have to look up the chart. I don't have it. I don't have it open. But I only will go into altcoins heavily, or more heavily than I am now, when the Bitcoin dominance is at 70-ish, and it is at 45 right now. So. All right, the last bullish thing I want to show you is that these last couple of weeks, the Bitcoin USD shorts have been going out of the market, and this represents a value of over $100 million in shorts from Monday the 28th until now. And you can see that shorters are getting out of the market. So when there's a lot of shorters getting in the market, you will see green candles, because this is a shorts chart, right? So green here means a lot of people are going in the short, and red means there are a lot of shorters going out of the market. So they're taking their profits and are likely to wait or buy into long positions. So that's how market makers do their thing. They sell and they buy. And so you can see this Bitcoin USD shorts chart is interesting to watch, and you can see that a lot of shorters went out of the market. So, well, that's it for today, guys. I hope you enjoyed the video. If you did, leave a like. If you're not subscribed to this channel, please consider doing so. And that's it for today, I guess. Bye.